Well, Europe will have to find new sources of oil and gas to get off, obviously, the Russian supplies. Russia was the world's second largest crude oil producer last year, pumping nearly 10 million barrels a day. About 60% of its exports went to OECD Europe. The UAE's ambassador in Washington says his country supports more oil production and will ask OPEC to boost supply. The UAE pumped 2.7 million barrels of oil a day last year. Antoine Halff is the chief analyst at Kayrros, and he joins us now. Let's talk about how realistic it is when the EU says that it would slash its Russian gas imports by 2/3 this year. Do you think it's doable?
It's tricky, but we're coming out of the heating season, which is the peak demand season for natural gas. So it all depends on the weather. If the weather cooperates, I think it's possible, but it's a challenge.
Mm-hmm. From what I understand, the issue isn't just finding alternate suppliers, it's getting the gas to where it needs to go, that there isn't the capacity, if you bring the liquefied gas to ports, to distribute it where it needs to go, whereas the existing pipelines are functioning perfectly properly in terms of the energy needs of the continent. How do you overcome that?
Well, you can switch to LNG, as you mentioned. You can also switch to other fuels, like increased nuclear production whenever possible, switch to oil fuels or coal, as we've seen before in Europe, even before this crisis started, based on price signals. Mm-hmm. So that's a challenge, but I think that's something that power generation companies can do. They're used to switching fuels. The other piece of the problem is crude. And there's now a self-embargo of companies against crude from Russia. Even in the absence of European sanctions, there's a huge market shift away from Russian oil.
Yeah, and what impact is this going to have on the markets? This invasion alone. What is your longer-term prospect for where this will place gas prices in the medium term?
Well, the prices have responded already, so the market is talking, even though there's no disruption just yet. We haven't seen a drop in inventories in Europe. We monitor crude oil inventories in real time all over the world, and we haven't seen a big decline this past week. We haven't seen an increase in Europe, decrease in Europe. We've seen an increase, actually, and we haven't seen a significant decrease really anywhere else. But it's a crisis waiting to happen, and it's anticipated by the market. It's priced in. Now, the long-term outlook really depends on what's going on the ground in the war itself, and that's very hard to predict at the moment. Mm-hmm. What we can do is monitor things in real time with satellite imaging in a way that was not possible in the past.
Sure. And what did you make of the U.S.'s rapprochement? I'm not sure you can call it that, but in any way, an opening to Venezuela. It's very realpolitik, all of this, obviously, as it's Absolutely. Trying to put the pressure on Russia, getting a bit closer to Venezuela to try to make up for some of that shortfall from the energy it won't be importing from Russia. What did you make of that?
Yeah, it's amazing what high prices can do to diplomacy. Clearly, the high price has completely changed the situation with Venezuela. There's now a very strong desire to get closer to bring Venezuela back in the market. It's a source of supply that's particularly close to the U.S. The U.S. was the #1 customer for Venezuelan oil. With access to U.S. supplies, Venezuela could increase its production, presumably quite fast. Iran is another one that's coming out of sanctions. Then you have U.S. production itself. Yeah.
And that's where you might have all these interconnecting stories. The Iran nuclear deal, for instance, might somehow be, impacted by the need for Iran to re-enter the energy market in some official way. Is that what the market is expecting or not?
That's what the market is watching right now. It's interesting because in the past, Russia was pushing for Iran to come out of sanctions, and they're now kind of thinking again now that bringing Iranian oil back in the market would play against them. But I think the market anticipates Iranian barrels coming back. There's a lot of Iranian oil in floating storage right now that could come back to the market immediately. And then Iran in 2016, when they came out of sanctions the first time, showed that they could ramp up production very quickly. and surprised the world really by how fast they could ramp up production. So the market, I think, anticipates something of the same nature this time around. So there are alternative supplies. There is a supply response today. We are expecting a supply response in the US itself in shale oil. Shale oil had not recovered pre-COVID production levels, had continued to be very subdued in its investment, looking for return on investment, not production growth. That's likely to change. The Biden administration is changing its tone towards the industry, and we're likely to see a supply response in the US. We're starting to see a demand response as well. It's a little bit early to tell, but in Europe, in particular, we monitor road traffic very closely, and we've seen a big plunge in transportation demand, in passenger vehicle traffic in Europe, probably as a response to high prices.
Thank you so much for joining us, the chief analyst at Kayrros, Antoine Halff. Really appreciate having you on the program.